Some of the biggest names in private equity are gathering in Berlin this week for the Super Return Conference. Leslie Pickard joins us now with a special guest. Hey, Leslie.
Hey, Joe. Good to see you, and thank you very much, Orlando Bravo, for joining us today, the managing partner of Thoma Bravo. So we're here at this private funds conference, the biggest of its kind, and you come out with an announcement that you've generated about $34 billion in fundraising, which is a huge number in an otherwise extremely tepid fundraising environment for private equity right now. How confident are you that you can deploy this capital and that you can ultimately see realizations from those investments given just the current environment?
Well, Leslie, it's really good to see you. This is like a yearly tradition here at Super Return, which is a nice celebration of private equity. I'm really happy to be here. Oh, we can deploy that and we can deliver. If you look at what we've done during the last 18 months, and that led to this fundraise, is we returned back to our investors in 18 months over $20 billion in cash. And private equity is all about performance. And a bit of the slowdown that you're seeing in the industry is because private equity isn't selling. We have never stopped selling our companies. If you can buy the right company and add a lot of value, you have enough room to give that buyer additional value, and you can sell your businesses and continue to get money from the investors. Now, then there's our ability to deploy it. We have never stopped buying either, which is very, very important. Private equity is not about market timing. As we say, we never buy the index, we never sell the index, we buy a specific company. So if you look at our trajectory through 2020, through the peak of 2021, through 22, 23, 24, and even recently with the Jeppesen deal, we have been consistently buying the software companies that we love. And our strategy consists of two key parts. We buy the number one player in software in a given category, and we look to completely transform that company operationally and from an M&A standpoint. There is so much opportunity in software to do that. I mean, we have the pick of thousands and thousands of software companies, many of which are growing extremely well, even in this market, that we can work with those management teams and improve.
It's a fascinating anecdote to the broader market, which has seen a lot of capital deployed in 2020, 2021 when rates were low, a lot of private equity firms overpaying for assets during that time frame and are having trouble. They're struggling to find exits, whether it be an IPO or M&A, because there's still somewhat of a valuation gap. You're not seeing that in the companies that you acquired during that time frame and the willingness to pay among the, whether it's the equity capital markets or various suitors out there, various buyers?
We are not. And that was a question that our great investors would ask us, and they did some great due diligence during the process, is what happened to those deals that we bought when the index was high? One of the best examples of that, and I've mentioned this before, is we bought Adenza literally at the market peak. If you look at the NASDAQ index, the past market peak, because now it's higher. And we were able to sell that company in the NASDAQ, generating a 35% IRR on a lot of capital, and that deal worked for NASDAQ. What matters in private equity, you're buying a business. People come up with a model. They say, okay, I can afford to pay this based on the value that I can add and my future cash flow and my expectation of a future multiple. People overpay when they miss their numbers. People overpay when the company, they haven't added enough value to the company, or people overpay when their future exit assumption was too optimistic. For us, we've been doing the same thing now for 25 years. Buy quality, add so much cash flow to our companies, and make sure that we're having reasonable exit assumptions. And that's been the case. That's why we've been able to sell all these companies over the last 18 months.
Now, a big theme in the private equity industry has been kind of the democratization of alternatives and access to retail investors. You have $184 billion in private equity specifically. Do you plan to expand that to retail? Do you like the prospect of democratizing the alternative space?
I like the prospect of democratizing the space. It is a really, really good asset class. That is why the best investors in the world, state pension plans, sovereign wealth funds that have so much capital, choose this asset class and have been actually growing it as a percentage of assets overall. Providing that opportunity to retail, and retail has many definitions. You can go to the ultra high net worth, and you can go all the way down to smaller investment sizes. I think that is a great thing. Now, at the same time, the industry has to be extremely careful about how to do it, because the first experience from that channel, from the retail investors into this category, is going to be instrumental into whether there's stickiness to it or not. So I have said before that I am cautious about these continuation vehicles that get sold to retail. There might be too many conflicts, too many different groups of investors. But overall, if retail picks the best managers that have a strategy that works in any market and are on the same basis and investing in the deal at the same time as institutions, I believe that's a very good thing.
All right, Orlando Bravo, thank you so much for being here from Super Return here in Berlin. I will send it back to you guys in the studio.